You're listening to the Real Estate Proverbs Podcast with host Kevin Jefferson. This is the number one podcast for African American real estate professionals who are doing extraordinary things. It's time to tune in. And now, your host, the People's Lender, Kevin Jefferson.
Hello, welcome to Real Estate Proverbs Podcast. I'm your host, Kevin Jefferson, and today we have a special guest by the name of Billy Keels. How you doing this afternoon, Billy?
Hey, Kevin, I'm doing just fine, and I'm looking forward to our conversation, my friend. It's going to be a good one.
Yeah, that's awesome. That's awesome. Billy, let's tell the fans a little bit about who you are and what you do.
Yeah, man. So Billy Keels. I'm a guy who's originally from Columbus, Ohio, from the Midwest, and about 20 years ago, I started a one-year sabbatical where I was living and working, I was living and studying in Paris, France. I had a job right out of college where I was just gifted the most amazing thing of being able to work and travel throughout some 58 different countries, and so. After that, I decided to do a one-year sabbatical. I was supposed to be in Paris to learn how to, learn French language and culture. I wanted to learn how to salsa dance, and I wanted to learn a little bit about wine. So it was supposed to be a one-year sabbatical. It ended up being, almost 20 years. I lived in Paris for a while. I lived down in a town called Montpellier down in the south. I also then moved to Italy. I lived there to start up a sales team. I ended up meeting someone from Spain right before I left for Italy. She lives in Spain. I moved to Barcelona in 2005. We got married a couple years later, and then we got two kids. And I've been working for a very big software company. I work and sell in Spanish language, Spanish and Catalan language during the day. And I also have been investing in real estate and doing that exclusively in the United States while I've been living in Spain for the last 15 years.
Wow. So you live in Spain and you invest in the United States?
Yes, sir. I've been living, so I've been in Spain for the last 15 years, and I've been investing in real estate now for the last 7 years, just going on 7 years.
Gotcha. Yep. So what actually got you into investing?
The thing is, Kevin, I don't come from a family from money or any of that kind of stuff. Like my parents both worked multiple jobs, did everything they could to get us in the right schools and stuff like that. And I'd always learned or been taught that you're supposed to go and get good grades, get a good job, and then once you got a good job, you max out on your 401k, you put money in the IRA, and I did that. And in 2000, I'd been working for a couple years, and I lost a portion of my portfolio in the stock market. And the thing that I got back from people was, just hang it out, hang on, just keep putting money in there and do dollar cost averaging. It'll all come back, and I did that, right? Because I'm a good student, and so I was doing exactly what I was told. And then 2008 happened again, and I lost 33% of my portfolio. And one of the things that my parents always taught me, Kevin, because I watch them work really hard all the time, is they said, look, if something happens once, then shame on them. If it happens twice, shame on you. And so this was the second time that my portfolio in the stock market had gone down. So I needed to look for a new avenue, man, because one of the things I'd always been focused on was being able to have control of my financial life. And so I came across this book, Rich Dad, Poor Dad, which I know a lot of people have come across, and that really changed my whole life, man. It changed the way that I perceived investing, and I thought, man, I could actually buy a property, be in control of it, and make $200 a month. Oh, this is gonna be cool. This is what I need to do because I can do more of that, and I plan on doing that. And the thing is with me living here in Spain, everything that I read in the book, when I tried to translate that into getting those $200 a month, it wasn't working out. Like it was all negative cash flow. I didn't have enough knowledge at that point in time to know that there are different types of locations. There's some locations that create cash flow. There's some locations that create appreciation and things like that. So one day somebody mentioned to me like, hey, Billy, you're from the United States. Like, why don't you just invest in the United States? And I thought, don't you see the Atlantic Ocean? Like there's a really big ocean between us. So, it was a crazy idea, but I'm really glad that I listened to a couple of different friends that told me that I should look at investing in the United States. And that's what I've done. I've never purchased any type of tangible asset in Europe, and it's been exclusively back in the United States. And that's a little
Wow.
bit about why and how I've been investing.
So how many units do you own?
Yeah, across my portfolio today, I've got in my portfolio 361 units. I also have leases on 14 ATM machines, and I've also been investing in large pieces of energy equipment. So, and I guess is one of the things like I believe that one of the best things about real estate, now that I've been doing it for 7 years, is it helps you to understand that you can go beyond just investing in the stock market. So I started in real estate. I started with smaller multifamily apartment or smaller multifamilies. Then I started investing in larger multifamilies, and then I found out about passive investing. And then once I started realizing the way that my portfolio was allocated, there were other different tangible assets that I could invest in that actually made sense for me, and it opened up my mind to be able to invest in other things.
Wow. So with you being in Spain, and of course you're originally from the United States, what was the first step you took in investing? Like, what was the first step you took in order to do it? Did you physically come to the United States to take a look at it? How'd that work?
Well, when I look back on it, Kevin, the biggest thing, the first real step that I took happened after I read Rich Dad Poor Dad, right? Because then I started, because like my family, nobody knew in my family, nobody had real estate. Like nobody was interested in real estate. Like that wasn't even a thing. It was like the big thing was to be able to save money. If you save money, you were investing. And so I didn't have any culture at all around real estate. Didn't know anybody that was part of the real estate supply chain. I didn't know any lenders. I didn't know anybody that was a fixer flipper. I didn't know anybody who was a host. I didn't know anybody. And so when I read Rich Dad Poor Dad, it really turned that light bulb on. And so the real first step, if I have to think about it, was really just that whole educational foundation. I started reading more books on investing. I read the whole Rich Dad series. Then I found other books that were talking about being a landlord. And then I read other books that started getting into more of the financing part of real estate. And I started listening to podcasts. I was going to YouTube, all that kind of stuff. So that, like, if I think about it, that was the real foundation. Because then I started feeling more comfortable and confident to get into conversations with people, test my knowledge. And then once I got a little bit more confident, then it was about making the jump. So I would say that the first real foundational step was just getting education and learning the language of real estate, and starting to meet people. And I was doing a lot, like everybody's on Zoom nowadays. I was doing Zoom 7 years ago, and Zoom and Skype and all the other stuff, because that was the only way that I could connect with other people back in the United States. So that was my real first foundational step.
So how did you finance that first property?
Well, the very first property I financed, and also too, I still work in a day job, right? I still work I'm a high wage earner, so I'm fortunate in that regard. And some of the things that happened, Kevin, is I started looking at the property, and what I learned is, hey, you know what? If you got 25% down on a property, you can actually, put that 25% down. You can borrow the rest from the bank. They can give you a 30-year loan, and then you just pay that back over time. And the better part it wasn't you paying it back. It was your residents that were paying it back. And so that whole concept made sense to me. And because I had been working and traveling and I was single, like I've always been somebody also too who just saved I've saved the majority of the things that I worked for. And so I had disposable money, and I used that money to put 25% down on the property, got a loan from the bank, and got it into my very first property. So it wasn't really any more than that. It was really pretty basic. I got a traditional loan relationship that I had at one of the banks, at a retail bank, and I put 25% down. Had to end up putting another $20,000 into the property, and eventually got the property rented pretty quickly.
So where was the property located?
In New Jersey.
It was in New Jersey.
Yeah.
So the bank that financed you, where were they located?
In New Jersey as well.
Okay. All right. So it got
Also in New
financed
Jersey.
through a regional bank in New Jersey. Um, so how how did you end up investing in New Jersey and you were from Columbus?
Yeah, exactly. So one of the things that happened, man, is and part of it was, when you finally make that leap to get into making the investment, because you read a lot of books and you can go through and you got all the theory, but eventually you gotta make that jump into reality, right? Everybody, I think even Mike Tyson talked about, everybody's got a great plan until they get punched in the face, and then it's kind of like, all right, well, I got to do something now. And so, because we had this relationship with the bank, and I didn't really have a plan, man. I just knew that all the stuff that I had been consuming, the content and making relationships, like I needed to take action. And so it was that point where you take action, and because I didn't have any strategy, I just looked for where family was. And so my parents divorced. My dad and my brothers and sisters lived in New Jersey. So I thought, if everything goes wrong, at least I have some people in this particular area that will be able to bail the property out, or just do whatever needs to be done. So it was a more of a fear-based decision. I didn't know anything about, are there more people, less people moving in and out? And it was just, if something goes wrong, do I have somebody that I can pick up the phone and they can get me out of trouble? And there was no more real process to that.
Right. What type of unit was it? Single family, multi?
No, it was a small duplex. It was a small duplex. And I think because I had such a positive experience with that first duplex, it was one of those things that made me also enjoy the investing even more. I mean, I'll tell you a story on the duplex if you want me to, a little bit
Yeah,
of the story
tell me
behind it.
about it. Yes, sir. Give us all
Okay.
the game.
Yeah. So I was really going through. I didn't know anybody. Ended up meeting someone at the bank. The person at the bank had a contact who was a general contractor. The general contractor, and keep in mind, I'm doing all this over the phone and over internet and stuff like that. Because we're talking back in 2012, 2000, yeah, very in the beginning of 2012. And so just relationship. And then they ended up introducing me to somebody who was a real estate agent. And that agent put me on the MLS. And so I was getting all these MLS feeds and I was going through them. And there was a property that she sent to me that was like, you need to take a look at this property. It was a duplex. They were asking, I think, $97,000 for it at the time. It was someone whose parent had passed away. They didn't want the property, and it was listed on the MLS. So I ended up purchasing the property, got into it, got my offer accepted, bought the property. It was $77,000. I put 25% down on it. Like I said, I had to put another $20,000 into it, and managing all this stuff from Spain, as you can imagine, wasn't the easiest thing. And I didn't have any systems in place at the time. So it was a lot of trust and a lot of faith, but all of the network that I built started from someone who I trusted and just other people of trust. So, but the great thing about this property, aside from it being a profitable property, it was one that I learned a lot. And because nobody had been there before, there were no comps, there were no comparable rents for that particular property. So doing some asking and found some websites that kind of gave me rents in the area. That property we ended up renting out for $1,400 a side, and I think my mortgage was $260. Just the mortgage. Of course, afterwards I had the insurance and taxes and stuff like that. But when that happened, it was like, wow, I'm using a lot of the skills that I have in my day job because I've been in sales for a long time, able to do that, been building in sales teams as well. So I was able to also use those skills transferably to talk with the team. And then at the end of the day, we had the right residents in there, and it was just a really profitable venture. And so that for me was like, how can I do more of this faster and stuff like that? So I had a really positive experience the first time, and that helped move things forward, I believe.
Wow. So when you say team, of course you had the contractors who did the work. With you being in out of state or out of the country, did you have a property management company?
No, and in the very beginning, Kevin, that was one of the things. Like I wasn't sophisticated enough to know any of that stuff. What I did know is that I took action. and it was the moment to, and I'll give you a real practical example. Remember in the beginning, when the residents were there, because there wasn't a property manager, I had a handyman, and the handyman could go by and drive, and if there was any problems, one of the things that I knew right away is that the residents, the tenants, they needed somebody that they could call and say that there was a problem, and I didn't want them to have the general contractor's phone number, so we had to get an answering service. So I found an answering service where people could call 24 hours a day, 7 days a week, and they would always be able to leave a message. And so once that text message would come in, the text message would get routed to the general contractor. We'd get an email. So that was that was the best way I knew at the time to be able to respond to the needs of the tenants. Not the best way, but it was the way that I knew at the time. And it was the best way that I knew how to be able to serve the tenant while I'm 8,000, 9,000 miles away.
Wow. So on that property, what was the cash flow like after all was said and done?
That property was, I think it was probably around 2,000 a month, something like that.
That's amazing, man.
Yeah. Yeah.
So go ahead.
No, I was just gonna say, and at the time, I just thought to myself, wow, this is really working. What it was for me, it was a proof point that all the things that I'd read, being able to start to build somewhat of a team, and then being able to take action, it was the thing that helped me realize that this could be a repeatable process. And I know it's not the same way for everybody. You maybe get into the first property and you lose a whole bunch of money. And I like to think those are just other learning opportunities, learning experiences at the end of the day. It's just how do you react from them? I recognize that this was a particularly positive experience, and it led me to want to do more and more of that.
Wow. So let's talk about, okay, you had a lot of success with the first one. And it sounds like what you said, you just took action. It wasn't analysis paralysis. You didn't keep reading books to find out what the best way to do it. You kind of just took action. So what was the steps getting the second property?
Yeah, so and maybe I'll just come back a little bit, because there was paralysis analysis. That's one of the problems that I had, because when I started reading the book, between the time that I actually read Rich Dad, Poor Dad for the first time and I actually made the first property purchase, it was probably about a year and a half. So I was trying to look for the exact perfect property. And what you realize is that you have, the best way is to take action on imperfect information, because there is no perfect information, but I kept waiting for the perfect thing and I was stuck, because none of the numbers were penciling out ever. And I lost the most valuable resource any of us have, and that is without a doubt time. And because I had paralysis analysis, I recognize that I'm a recovering perfectionist, is what I tell everybody. And that cost me probably being further along in my journey than I am now. But that's okay. It's part of the journey. Everybody has their own specific journey, and that is what it is. As it relates to the second property, once the first property was in the portfolio, then it was about, okay, what is working well, what's not working well, how do we improve this? And the same team was in place. And so rather than go look someplace else, it was, all right, well, perfect. I want to get another property because I had more money, and I knew the banker, I knew the real estate agent, and I had the general contractor, and things were going well. And so another property came through, didn't actually meet exactly what I was looking for at the time, but it was close enough. Got the property under contract, got it accepted. And a couple months later, the second property was in the portfolio. So it was between the first property, which was a smaller duplex, and then bought a quadplex. There was, I think it was like 6 months between the two of them.
Got you. So within a year and a half of you reading the book, you now acquire 6 units.
Yep.
Okay.
Yeah.
Cool.
Yeah, it was about that. About that.
So did the numbers on the quad work out similar to the duplex, or how'd that?
No. It wasn't anywhere. So and the thing is, I was very, very fortunate with that very first duplex, and I've not found another opportunity like that. I mean, it for me, that was the unicorn, and the next deal was nowhere near that. But it was still more in line with, and I don't remember the exact numbers on that one, but it was more in line with the $300 a door, $300 a door per month. right? It was almost like my duplex. There was more free cash flow on the duplex than there was on the next quadplex. But it's part of it, right? And
Right.
that's when you start to get into more the game of scale.
Gotcha. So at this point, when did you say, okay, Billy, you need to come up with a system if we're going to continue to scale units?
A lot of it, and I don't know if I was even that sophisticated, Kevin. I wish I could tell you this great grand scheme of things, but it was more about I wrote down in a book. I wish I had my book here. I'd show it to you, but I wrote down just my objective was to have 10 doors in 5 years, and I didn't really. I just knew that I wanted to have 10 doors in 5 years and be able to make a certain amount of money per month. That was it. And what I knew at the time, and what you typically were going to recognize, is the team working. And the team was working. I was getting on track or ahead of my financial goal. And it was just, how do I get another property? It wasn't until like the third acquisition that I started realizing that I had a problem. And the problem was I was working a really demanding day job. I loved being able to spend time with at the time, my kids were really, really young. My wife and I had 2 kids, and I was running out of time, man. I was working all day, every day. And that's when I realized like something's got to change. So I literally stopped purchasing any more properties. And I decided that it was time to really connect with somebody who knew more than I did, because I was doing all this on my own. And that's when I stopped to reach out to get a mentor to say, look, this is my situation. I'm working in a really well-paid job. I work a lot of hours because I'm very, very, I'm well paid for what I do. And I've got these rental properties that are kicking off so much money, I don't even know what to do with that. I'm starting to realize that this isn't working well because I'm not able to get the right service to the tenants, and I needed help. So I literally stopped and got a mentor, and we did a whole diagnosis of what was happening. And that was the point that I realized, okay, I've got to put some structure in place, because if not, you run the risk of just chasing after the money all day, and that can take you down a really bad path because you're just chasing money. And I don't say money's not important, because I know what it's like to not have it, and I know what it's like to have it. And I would rather have it than not have it, but not at the cost of life and family and all that other kind of stuff. So maybe a little bit deeper answer than you were looking for, but I felt like I wanted to share that with you.
No, I mean, it goes along perfectly with what we need. Because at the end of the day, you're right. You can work 20 hours a day, and if your family's constantly growing and you're not with them, then, is it really worth, that money?
Yeah.
People say work-life balance, and I'm not sure if there is one. You just got to do the best you can.
Yeah, Kevin. And even today, I don't think I get it perfectly, but I'm much more aware now today than I was before, because before I was just chasing more money. I just wanted to get more money, more money, more money, because I come from a background where I didn't have it. And when you start realizing that your children are getting older and you're focused doing this, and you got a busy day job, like, you can't get that time back. And that is and that's the thing to me that is the most important, and not just to me, to a lot of people. It's the most important asset that you have. It's your time, because you can never get it back, ever.
Nope, you can't. So let's fast forward to how you were able to get, was it 361 units?
Yep.
All
Yes.
right, how
Yes.
how
So yeah. So one of the things that I did not know was, because I just didn't come from the culture. I did not realize that there was a way that, or as anybody, right? But I'll speak as a high wage earner, that there was a way that you could actually continue to work your day job because you like your day job, and you can invest in real estate with other people and through other people in things called syndications. And a syndication basically is just where people are able to pool their money together to go out and buy a particular asset. That asset can be a large multifamily building. It can be a piece of energy equipment. It can be a whole bunch of different things. But it's just people that have the common goal to put their money together so that money goes out and then is is managed by someone else who's then operating the day-to-day of a particular property. And so when I started finding out about this world, that started making sense to me too, because one of the problems that I was having is every unit that I kept putting in my own personal portfolio, it meant more work for me, more time for me, more time away from my family, more time away from the things that were important to me. And so then I started looking for specific opportunities that I could invest passively with and through other people. And so that's when I found it and got involved in this game called syndication.
So how do you get paid on a syndicate?
So, well, it depends, right? It depends if you're acting as the syndicator, as the sponsor. As a lot of times, you may hear the word sponsor, or you may hear the word syndicator, which is the person that's actually bringing that. And there are a number of different ways you can make money by being able to bring it together. You have a sponsorship fee. You can have asset management fees, which is if you're doing the ongoing management of a very large apartment complex, right? You can be the asset manager, the person that's managing them. And then there's also ways if you refinance, you can have a percentage of that refinance that goes to you as the syndicate. And also too, at the moment that you dispose of or that you sell the property, there can be also ways for you to have compensation for any of those ways as a syndicator. As a passive investor, right, which was the thing that I was really, really interested in, because I didn't want to be in the stock market anymore. I was tired of that game because there was no control. I was looking for something that had a lot more control, there's something that was tangible, and also people that I actually knew and understood and could talk to. And so as a limited partner or somebody who's just passively investing, you're typically going to know what is the return that they are expected for a particular property. And in the returns, I don't even dare say the returns because it depends on what the project is, what the type is. But typically, you're gonna know what your projected returns are as a passive investor.
Wow.
Hopefully that answers the question.
Yeah, it does. It does. So we touched on how you get paid. How do you actually get in it? Like, what are the requirements?
Well, there's a couple different requirements. Typically, and without getting too technical, there are different types of syndication exemptions, right? You go through SEC or Securities and Exchange Commission's exemption, which are typically something like you may have heard of, we talk about or you hear 506B or 506C. And if you are someone who is in a 506B, it means that your friends and family, for lack of like just making it, it's kind of like friends and family investing. There's some rules around that and to how many people you can have invest, et cetera. And then you also have 506C. And then the 506C is for accredited investors. And accredited investors are someone that the SEC, Securities and Exchange Commission, says is someone that has made $200,000 the previous 2 years and is expected to make that in the current year. If it's a household, it's $300,000 in the previous 2 years and expected to make $300,000 in this current year. That's the income way. There's also a net worth way, which is someone who has a net worth of $1 million, excluding their primary residence. So in order to access the 506C, you would need to be an accredited investor. I think there's one other way that the SEC now has through tests and things like that, but those are the main ways through a 506C. And then the 506B is family and friends.
So how many units do you have that sit in your portfolio alone, and then how many are with the syndicate? So, like, I guess a better question is, do you still have those 6 units that you had?
I have, as we're speaking today, I do have them. I don't know if I will in a couple of weeks, but yes, I do. But so it's roughly in my own portfolio 60, and then 300 in the other investing with and through other people.
Wow. So the 60 that you have, are they all in Jersey or where?
No, between New Jersey, Ohio, and South Carolina.
Okay.
Or North Carolina, Charlotte, MSA.
Gotcha.
Yeah.
And the syndicates, what's the largest units you guys have in the syndicate?
The largest single one is that I'm invested in is 250 doors. 250 doors.
Oh,
Yeah, and then there's another um, a hotel. It's a Hilton branded hotel. Also, too, it's an 80 room hotel. So 80 room. Yeah, yeah, yeah,
gotcha. Oh, that's awesome, man.
yeah,
That's awesome. So,
yeah,
Billy, oh, go
yeah, man.
ahead.
No, I was just gonna say, it's one of those things that I didn't know a lot about before, and it is just it's a way to also too when you're passively investing through a syndication, it gets you closer to, like when I invested every time in a syndication, I've always asked the syndicator, hey, listen, can I get closer to this particular opportunity? I want to be able to learn, because by doing that, I mean my goal is, and I've gone out now and have syndicated large pieces of energy equipment, which help people. On specifically active income. If you have like a lot of times when you're investing in real estate, you get a lot of passive income losses without getting into too much tax talk. But if you're a high wage earner and you're getting lots of passive losses, but you can't you help to offset your active income, then that can sometimes be a challenge because you have these big bucket of passive losses that just keep building up, but you can't really take advantage of them. So I've also, every time I look to go out, is to solve, typically is I'm looking to solve my problem, and then if I can solve my problem, then I'll take it to other people. And so now as I'm syndicating particular opportunities, I'm looking to help other people solve their problems, which I guess is what I've been doing the last 24 years in the sales role.
That's awesome, man. So, Billy, tell us a little bit about your podcast that you host, tell us, and how we can listen into it.
Yeah, man, I appreciate that, Kevin. Yeah, my podcast is the Going Long Podcast with Billy Keels, and the real goal is to help people understand that you can feel comfortable as well as confident investing beyond your backyard. I've been investing exclusively in the United States from Spain, and whether you're on a different continent or just in a different state, I know a lot of times people will say you got to invest in your backyard first. I fundamentally don't believe that because I have not been doing that. I think it is very important, or I know it is very important if you're going to invest long distance, like me, I'm a long distance investor. I'm the long distance investor, right? Is making sure that wherever you are investing or placing your capital, that the team that you have on the ground is a world-class team, because that is the part of the control that you're giving to somebody else. So it's really important not only to understand if you're going to invest passively with somebody else through a syndication, but make sure that the syndicator as well as the operator, specifically the operator, really knows the location that you are investing your capital in.
Cool. So, man, I appreciate you hopping on. For those who want to get in contact with you or follow, what's the best way to reach out to you?
Yeah, Kevin, I appreciate that too, man. A couple of things. I would say people, because I like talking to people, and maybe that's just my sales thing, because I like interacting with people. And so I would say if anybody wants to just get on a call, talk about things, you can do that. You can go to bit.ly/speak with Billy. I love connecting with people on LinkedIn as well. So connect with me on LinkedIn. And when you do that, make sure you let Kevin and I know, or let me know that you saw Kevin and I speaking here, and then that's why you're reaching out, because I'd love to be able to give that feedback back to Kevin as well. And if you're interested in learning just more about long distance investing, I did write a book at the time. It was an Amazon bestseller. You can go pick that up for free. Just leave your name and email address. You can also get to know a little bit more about me and our community. Just go to growyourmoneythesmartway.com. Leave your email address there. And we'll get that ebook right out to you. So, and you can also go to billykeels.com and find out more about me and what we're doing.
Awesome, man. I appreciate your time. Any parting words for a beginning investor that's looking to get their first or first property?
I would say keep being right here, listening and learning with Kevin and his guests. I know and I've seen the things that you're doing, Kevin, and it's fantastic. And as you're getting started, also it's really important. Make sure that you're taking action. I mean, Kevin, you and I met because you took action, right? And the two of us got here and got connected, and we're able to share this story together. So I commend everybody who is already investing time here with Kevin, and would say continue to do that, because Kevin is providing so much value, and also be willing to take action. Don't be like me and get in paralysis analysis forever. So that would be the biggest thing, is just take action and keep following and listen to the words of wisdom that Kevin is providing you.
Awesome. Well, man, I appreciate your time. Thanks for carving out that time for us. And I look forward to building a relationship with you here in the future, brother. If you like this podcast, please like, subscribe, share, and comment. And I'm your host, Kevin Jefferson. Have a great day.